Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 19th of December. BOJ's epilogue for 2016 in focus. The next central bank to give its epilogue for 2016 will be the Bank of Japan. The bank will announce its policy decision during the Asian morning Tuesday, and expectations are for BOJ officials to keep their stimulus program unchanged. Despite the latest economic data supporting that, on balance, the Japanese economy is showing signs of improvement, our main argument for the BOJ to stand pat is the recent collapse of the yen. Ever since Trump's election as US president and the subsequent dollar rally, the Japanese currency has depreciated by roughly 12% against its US counterpart, something that is likely to be a very welcome development for the BOJ. A weaker currency makes the bank's job of returning inflation to target easier, as it raises the cost of imported products and thereby the nation's general price level. As a result, we expect the BOJ to hold off from acting at this meeting and take the sidelines for some time while it examines fresh data under its new policy framework and following the yen's slump. Given the aforementioned improvement in the data and the weaker yen, we expect relatively upbeat commentary from the BOJ with regards to the economic outlook. Something like that could cause the yen to recover some of its losses, at least temporarily. USD yen could move lower for a test at the 116.8 support zone, where a decisive break could encourage the bears to add to their positions and set the stage for further declines towards the 116 zone. Nonetheless, given that the price structure on the 4-hour chart still suggests an uptrend and that USD yen is trading above an uptrend line taken from the 23rd of November, the broader outlook of the pair remains positive. As a result, we could see the rate to turn up again at some point and perhaps aim for another test near the 118 hurdle. As for today's highlights, in Germany, the IFO survey for December will be released. The forecast is for both the current conditions and the expectations indices to have risen, albeit slightly. We see the risks surrounding the current conditions forecast as skewed to the upside, considering the unexpected surge in the current assessment index of the ZW survey, as well as the upbeat German composite PMI survey. Importantly, the PMI showed that German companies raised their prices at the sharpest rate since 2011, as the weaker euro placed upward pressure on import costs. This was already evident in November's IFO report, which showed that an increased number of companies intended to raise their prices in the near future. Should December's IFO survey show that businesses continue to expect prices to rise, this would be encouraging news for the ECB, as it could confirm that the bank's prior easing measures are working as intended with regards to lifting inflationary pressures. Something like that could prove positive for the euro. Euro USD could move higher to challenge the psychological territory of 105 as a resistance, where a clear break could aim for the 105.30 zone. From the US, we get the preliminary Markit services PMI for December. We have only one speaker scheduled for today. Fed Chair Yellen will speak on the state of the labor market. We expect market participants to focus primarily on how she views the rate path for 2017 and beyond, especially following the hawkish remarks at the latest policy meeting and the upward revisions to the dot plot. On Tuesday, the BOJ rate decision will take center stage, as we already described. On Wednesday, market attention will shift to the Riksbank policy meeting. The forecast is for the bank to keep its key interest rate unchanged. We share this view, but we expect the bank to extend the duration of its QE program at this meeting, primarily due to the latest inflation data undershooting the Riksbank's own forecasts. In New Zealand, GDP data for Q3 are coming out. On Thursday, we get a variety of US economic indicators. Personal income and spending data, as well as durable goods orders, all for November are coming out. We also get Canada's CPI data for November. On Friday, we get the UK's final estimate of Q3 GDP, as well as the current account balance for the quarter. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.